Hi, good morning, good morning. Thank you guys so much for joining today's live stream. Today is December 13th, 2024, and on the daily time frame, we have continued to expand here during the London and Asian session. Coming into today, I was anticipating, I wanted to see prices take out previous day low here. I wanted to see Thursday's low get attacked before we had this move up again. We did have a really large gap up once we opened up at 6 p.m. Eastern time. This right here, this massive this gap up, kind of negated the idea that previous day low was, for me, was at least a bias. But like I said, I'm still coming into today with the idea that I was coming into the idea that we were going to take out previous day low on Friday. But with the way that we expanded during the London session and Asian session, that completely negates the idea now. To be honest, I don't really have a bias coming into today. I would wait for the 4 hour and the 8 hour time frame to close to give me a morning objective. But right now I have no bias. Like we have taken out Wednesday's high of day, which was all-time highs, and we took out previous day high as well. So here on NQ, we're trading at all-time highs. I don't really have an objective. Created the low of the week on Tuesday, and now we created the high, new all-time highs on Friday. So typical, open, low, high, close candle. But yeah, not necessarily, I don't really know. It's not that I have to know, but yeah, I don't really know where prices wants to go here now. I do have some standard deviation projections here on, I believe, the hourly time frame. So from from this up close candle's high to this down close candle's low, I did a standard deviation projection, and the reason why I did this is because the negative 0.5 projection aligned with Monday's high of day. So this manipulation leg here into this daily fair value gap, its standard deviation aligns with existing buy side liquidity. So I just decided to choose that, and I believe we just took out the -1 standard deviation as well. So yeah, we just took out -1 standard deviation. If we are to continue higher here on, continue to make new all-time highs, -1.5 is a target, and we have some more projections here, but I don't necessarily have anything for that as of right now. But yeah, I believe that was it, standard deviation there. But yeah, don't really have much of a excuse me, sorry, I don't really have much of a daily bias coming into this morning. I would wait for the 8 hour time frame and the 4 hour time frame to close to really give me a morning objective. But as of right now, I have no objective. 12-hour fair value gap continued to maintain bullish. So here's that. We traded into the 12-hour fair value gap and expanded higher. We took out a swing high with the fair value gap. So the low that gets created once we tap into that fair value gap now becomes a strong low. And let's just continue to wait here. We have, like I said, we have about like 23 more minutes left till the 10 o'clock open. I don't necessarily trade the first 30 minutes. I kind of just let, you know, prices do its thing in the first 30, just to kind of get a rhythm and kind of get a feel of the markets. And yeah, that's gonna wrap it up for my buys here at least. And if you guys have been watching my live streams this past week, I've been introducing to you guys, or I've been, you know, stating over and over how I'm able to get my, you know, my daily buys, my my morning objective, my you know, my weekly objective, or my weekly bias. So this morning here, later at 10, we are going to close here on the 8-hour candle and the 4-hour candle. So based on how we're going to close here on both of these candles, what can you anticipate for prices to do? Can you anticipate for prices to take out the 4-hour high and the 8-hour high, or will we target the 8-hour low? Here's the 8-hour low. So are we most likely to attack? This is the 8-hour low, but this is the 4-hour low. So are we most likely going to attack? Let's just stay on the 4-hour time frame for right now. Are we going to attack the green line or the red line here with the next 4-hour candle? If you answered the green line, then you got that correct. For me at least, it's kind of clear that prices will most likely want to attack the 4-hour high, and that gives me a bias, right? That gives me something to look forward to. I can anticipate for the 4-hour high to be attacked, and for us to treat this 4-hour fair value gap that we're going to create as a breakaway gap, meaning I want to see prices attack the 4-hour high first, and then after we take out the 4-hour high, we could retrace or rebalance the inefficiency. But as of right now, I would treat this inefficiency that will probably get created as a breakaway gap, meaning prices shouldn't rebalance back into it. It should complete its objective first relative to that time frame, right? And that's kind of basically, if you can apply that theory to every single candle, like if I were to do that on the daily candle, right, yesterday, which is why I was anticipating previous day low to be attacked, but at 6 p.m. when we opened up, we had a large gap up, which is why you can see that we closed here yesterday, but we opened up here. So this is that gap that we created, the gap up. But yeah, based on this down close candle right here, I can anticipate for this down close candle's low to be taken with the next daily candle, which is essentially my daily bias, right? I want to see lower prices. And how low can we go? Well, we could, the low, not the lowest, but the low that you can, you know, that is objectively clear is the previous day low. But yeah, coming into today, like I said, we have already completed again. Actually, we took out all-time highs again, and we took out previous day high already. So in general for today, if we do continue to expand, I'm not going to be a part of it. This here is completely fine. If we continue to expand, that's cool. But if we do get some sort of retracement back, like a push down again, I would like to see us retrace back into the TGIF zone here. So this 0.2, this little blue section right here, I'll indicate that with a blue box. yeah, if we do get bearishness, I would like to see prices trade back inside this little area here. But like I said, that's only going to be confirmed if we can get bearish price action. But yeah, that's gonna be it for my morning bias and my daily bias. We have 20 minutes left, so I'm gonna go over some of the pros and cons here for next week, or not next week, but the pros and cons for this week actually. Here I are. So the first, sorry about that. So the first pro here, or the first positive, is that I was able to maintain composure and discipline throughout, the day. If I'm able to follow my rules that I've created for me, that means I'm disciplined, right? That means I'm able to not get swayed or not get entertained by any ideas that the markets gives me if those ideas don't follow my rule sets. So like this push up higher here, one could say that you want to be a part of it, like you're intrigued to be a part of this move up higher. But if the markets doesn't give you an entry pattern or a model for you to be a part of it, then it's reasonable for me to just sit on the sidelines and wait, right? It's reasonable for me to just watch on the sidelines. If the markets doesn't provide an entry pattern to be a part of it. So you don't want to chase, you want it to come to you. Every single trade here that I take, I require a higher time frame objective. And what are higher time frame objectives, you may ask? So essentially they are why prices moves in general, right? We rebalance inefficiencies, we retrace back into equilibrium. Bye. And we retrace back into equilibrium. So there's a saying that you always want to be selling high and you always want to be buying low. That's a pretty, basic concept. And that's essentially what trading into equilibrium is. This is like another add-on to that kind of that basic concept, is that if you know that prices wants to buy in discount and sell in premium, that means you can sell short to go long, if that makes sense. If you know that prices seeks out this discount or premium, then you can try to gauge where discount and premium is. And if prices hasn't hit discount or premium yet, like let's say prices are bearish, right, and there's a dealing range. So there's this idea here from yesterday on EQ, or not EQ, ES. From this swing low to this swing high, right? As you can see, prices here right now is, it's retracing back inside a range. It's retracing back into that swing low to that swing high is this range. And what's that blue line in the middle? That's the equilibrium point. So anything below that is discount, anything above that is premium. So if you can kind of see that prices is trading lower here, and prices hasn't traded back into equilibrium here yet, that means a higher time frame. That means on the higher time frame, on the 4-hour time frame, prices wants to trade back inside discount. So if you go on to the 15-minute time frame or the hourly time frame, any time frame that's lower relative to the 4-hour time frame, and you can kind of structure a trade to it, then your higher time frame objective would be to retrace back into discount. And your objective for the trade isn't, you're not going to be targeting previous week's low. You're going to be targeting the equilibrium, and then you can set up some standard deviations for runners. But that's kind of basically what the EQ or trading into equilibrium means. So rebalance inefficiencies, retrace back into equilibrium, generate liquidity, and take liquidity. Generating liquidity, what does that look like? Generating liquidity looks something like this right here. Like all of that back and forth price action, it's understandable that prices is moving up and down. So during those specific time frame, like maybe in all of this consolidation here, if you were able to, you know, find a model on the 15-minute time frame, that makes sense. But at least on the 4-hour time frame, we're creating, you know, highs and lows, and it's really back and forth. So once we get this, you know, this manipulation leg into a weekly busy, this is us taking out liquidity, that massive move up, right? It's kind of clear, it's super clear the direction, and all of the liquidity here that we have created, this swing high, right? This swing high, this swing high. Now that's all up for prices to grab, just to take that. And so there's that. So that's basically what, you know, objectives are, why prices moves in general. Second point, or sorry, another rule set here is displacement, right? So ICT is introduces the idea that you wanna stick to one entry pattern. Are you gonna be entering off of order blocks? Are you going to be entering off of breaker blocks, fair value gaps, mitigation blocks, whatever PD array that PD array of your choice? That's up to you. But the PD array that I chose to use as my entry pattern is the fair value gap, right? And why are fair value gaps created? They're created through displacement. Displacement meaning there's a entity out there, right, that wants to accomplish a objective in a certain time frame, and it wants to complete it right now, right? If prices are willing to complete a objective right now, like right this instant, they're going to drop, you know, kind of view it as, let's just say you're in a kid-sized swimming pool and an elephant is dropped inside that kid-sized swimming pool, and it's in the kid-sized swimming pool is filled with water, right? If you drop an elephant inside that pool, the water is going to be displaced outside of the pool. That pool is not going to be able to contain the water anymore. The water has to find new space for it to, you know, go to. And that's kind of essentially the idea of displacement. It's like prices handing its hand to you, that like, hey, I want to do this thing right now. And that's kind of what displacement is, or that's just how I view displacement, right? So like with this move up here, this massive move up, right? What is created in that leg up? Fair value gaps. And there are inefficiencies here, so prices are going to want to retrace back into it, rebalance some of the inefficiencies, and then continue higher. Like this, in this consolidational move right here, or like this, do you want to be a part of this back and forth price action? No. And what constitutes that is, look at the lack of displacement or the lack of fair value gaps in this move. It's just super back and forth. You get a leg up and instantly you get a leg down, leg up, leg down, leg up, leg down. Really, really back and forth. So whenever you start to see, you know, fair value gaps get created, it's just a lot cleaner. But yeah. Second positive here is that I'm able to utilize the fractality of the markets, right? Prices is fractal, time and price. So if you're able to view a daily or if you're able to view a 4-hour candle as a daily candle, if you can understand that every single time frame has an objective, right? What's the objective of the daily candle? For us to take out the daily high. What's the objective of the 4-hour candle, which is what I'm doing here for my morning bias. So I'm gonna ask myself, is prices going to take out this 4-hour high or this 4-hour low? And once I'm able to answer that question, that gives me an objective, that gives me a bias. If I answer I want to see prices take out this 4-hour high, that gives me a bullish bias for that time frame, for that 4 hours, right? Same thing with the 8-hour time frame. Is prices going to take out this 4-hour or 8-hour low or this 8-hour high? And that gives me an objective. And you can apply that with every single candle that you see, right? You can apply that with the daily candle. Are we going to take out this daily candle's low, or are we going to take out this daily candle's high? And once you're able to how do I word this? Piece all of the time frames together. So if all of the time frames are suggesting the same thing, if the weekly time frame suggesting higher prices, if the daily time frame is suggesting higher prices, if the 4 hours, if all of those time frames are in trading in tandem with one another, it's like a set of gears. It's like a set of gears working together. Like if you ever rode a bike, you need every single gear to be moving in one direction for that bike to work. And these smaller gears that I'm showing you guys here on this picture here, like this smaller gear could be viewed as the 4-hour time frame. The larger gears could be viewed as the weekly time frame, and they all should be spinning in tandem with each other, right? To help each other move. And that's essentially what I'm doing here too. And prices is fractal, right? Every single gear has the same structure. There's the gear is circular. There's little ridges on the outer parts of it that helps it, latch on to other gears for the other gears to start moving. But, the only difference is that the larger one might have a more impact on, compared to the smaller ones. So ICT, like I said, he hides those. He doesn't really state it so clearly. I think the only thing that he mentions about time frame alignment is, if you can view a 4-hour candle like you view a daily candle, your world's going to basically open up. That's literally what he said. So I literally took what he said, and I kind of had to break it down and what he means by that. And this is what I concluded with. I'm not too sure if this is what he means, but this is how I interpreted it as. But yeah, there's that. So understanding the fractality, the fractal nature of the markets. Third thing is that accepting the markets for you have to accept the fact that the markets move to it doesn't comply to you. It moves up and down based on what it wants to do, right? You can't control what markets are going to do. If I was able to control the markets, right, I would freaking be in like outer space right now or something. I don't know. I would be freaking a trillionaire if I was able to control the markets. But I'm not. Like, you have to accept the fact that you don't control the markets. You telling the markets, hey, I want it to go up and down, isn't actually going to affect it. And the only thing that you can control is your execution. If it gives you an opportunity, the only thing that you can control is your ability to determine if you want to take that model or not. Fourth thing is having a time stop. This isn't a concept that's this is a concept that I can't really just talk about without showing you guys an example of a time stop. So I'm just know that there's two types of stop losses for that I trade with. There's a time stop, right, and there's a price stop. A price stop is probably something that you're super familiar with. If prices drops below this certain level, then you're gonna get stopped out. If prices trades above this certain level, you're gonna get stopped out. But time stop is a little bit different. So some of the things that I could work on here is, managing risk properly, and trading with the same risk on every single trade. I can't discriminate between the trades that I do take. And second is just the focus. Just focus on the task at hand. It's kind of hard to juggle three things at once. If you can just focus on that one thing in front of you, then you're more likely to complete that task than if you're juggling three things. And I saw this video where they were talking about like they were essentially just talking about what I'm talking about here, like the idea of focus, right? And this guy, he brings up a pretty good point where if you're working on three different things at once, and let's say I'm coding, and I spend 30 minutes doing it, and I'm starting to, there's a state that you go into whenever you're really into something where you get into it's called the flow state, right? Where you're not necessarily thinking, it just comes to you, everything just comes to you easily, and you're able to process things pretty fast and whatnot. But if you get into that flow state, and if you go off of that, you go away from that task, you kind of, that momentum that you built drops. You no longer have that momentum, and you kind of have to build it up again. But if you're able to focus on one task at hand, that momentum that you're building, it's only going to exponentially grow, right? You're gonna eventually be able to do more work focusing on one task than compared to you doing less work focusing on multiple tasks. Or it's not even focus, you're just trying to do too much at once. So that's just something that I have to work on. And I feel like this, for me, because I have ADHD, it's kind of hard for me too. But as long as I know that I need to work on my focus, then I have the mindfulness that there's something that I can work on. Improvements here coming to next week. Like I said, continue to just practice patience and discipline. There are times where you're just going to have to sit on the sidelines. So that's actually, I rambled on for too long, but that's actually the 10 o'clock open. So let's apply that thought process, right, with the 4-hour candle here, if it shows up. So based on the 4-hour candle and the 8-hour candle, so notice how we just closed on both of those candles. I can anticipate here, coming into the morning, into this morning, I can anticipate for the 4-hour high to be taken, and I can anticipate for the 8-hour high to be taken. So notice how this daily candle, or this 4-hour candle closed. Just simply based on looking at it, I can anticipate for prices to take out the high. So if I know prices are more than likely going to attack the high, my buys coming to the morning would be bullish. I want to see higher prices. And if I want to see higher prices, do you want to be a buyer below the open, or do you want to be a seller above the open? If you're in a buy program, you want to be, and in this case, you want to be a buyer below the open. So I'm going to take the 10 o'clock opening price here, and then I'm going to see if prices will give me an opportunity to attack the 4-hour and the 8-hour candles high. And You have to take this with a grain of salt. You can't simply just take a trade because it looks like it's going to take out this 4-hour candles high. You gotta. So this kind of gives me, this gives me the order flow, right? The order flow for me is bullish, but now I have to go onto the lower time frames to find a reason to even take it, right? So notice how the 4-hour time frame here is suggesting higher prices. I want to see this 4-hour high to be taken. So now I'm going to go on to the lower time frames relative to the 4-hour time frames. So if I'm trading with the 4-hour time frame order flow, right? Am I going to go into 1 second chart? No, that's not. It's not proportionate, if that makes sense. Like you're going from. That's like saying you're going from. Think of it like this. That's like saying you're going from. That's like saying you're going from the earth and going straight into and trying to pinpoint exactly one house or like one coordinate, exact coordinate, right? You want to go from the earth to maybe like a continent to maybe like a state and then to maybe to like a county. And then you start breaking it down. If you go from 4-hour straight to the 1 second, that's basically like the same idea. You want to break it down here, right? So you could go from 4-hour to hourly. That's only a 4 times difference, right? So every hourly candle, you need 4 hourly candles to create one 4-hour candle. And because the hourly high and the 4-hour high is the same, I could go on to the 15-minute time frame. And look at here, the 15-minute time frame. Is the 15-minute time frame suggesting for us to continue higher right now, right? Is the 15-minute time frame telling us that we're going to attack the 4-hour high right now? Not essentially. This 15-minute time frame, we created a 15-minute fair value gap, a bullish fair value gap, and this bullish fair value gap should be respected if we're going to be trading in accordance to the 4-hour order flow. So we need to see a bullish 15-minute power of 3 here after trading into this 15-minute fair value gap for us to maintain bullishness, for us to maintain that bullish bias. But yeah, so notice how this 15-minute time frame isn't in alignment with the 4-hour time frame yet. So I want to wait and see when this 15-minute time frame is going to be in alignment with the 4-hour, 1 hour, and the 30-minute time frame. But as of right now, it's not. So I'm just going to wait for more time, right? To be patient, practice patience, and discipline, and following your rules. So I basically just went over the first point and the second point. My higher time frame objective is, for today at least, or for this morning, is the 4-hour/8-hour candles high. Continue to watch SMT. So what I do want to draw you guys' attention to is NQ and ES. So take a look at where ES is and take a look at where NQ is. ES created the exact opposite candle of NQ. So this is actually something that you don't actually want to be a part of right now. Like, this is low probability conditions here. ES has failed to take out previous week's high and even Wednesday's high of day. However, NQ has taken out previous week's high, the Wednesday high, and is continuing to make new all-time highs, whereas ES isn't doing that. So we're weaker on ES and we're stronger on NQ. And it's not that we're trading, because we're in the macro sense, we're bullish, right? I'm sure all tech stocks right now are really strong, which is why NQ is trading so high right now. So that's just something that you want to pay attention to. And SMT, a swing high or a swing low will always be associated with SMT. So just that's just something that you do want to pay attention to too. That SMT will always accompany a swing high or a swing low. Or sorry, a swing high or swing low will always have some sort of SMT between the markets. And last but not least, properly managing my risk. And with that, that's gonna wrap it up for the pros and cons and some of the improvements here for next week, or I guess this week. But now I would like to do let me go over, we choose a quote for today. Dun, 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 dun. Oh, yeah, there was this quote here. Maybe I've already used it for yesterday. But it goes like, let's see. If it's the quote I'm thinking of right now, then I might have used it already. Oh yeah, so yesterday's quote was, if you make no sacrifices to make your dreams come true, your goal will become the sacrifice. So today's quote, quote. Let's just find quote over patience, because that's something that I do want to work on. Patience. I like this definition of patience here. So I'm going to use this. So patience is the calm acceptance that things can happen in a different order than one may have. So I've realized that majority of the times where I lose patience is when something happens that's not expected, right? And it's not expected in a good way. So let's see. Patience is the calm acceptance that things can happen in a different order than one may have in mind. And I like that. So I'm going to use that today. Right. This is the Hypothetical. 15-minute fair value gap. We still have about like 4 minutes or something left. 3 minutes and 30 seconds till this 15-minute candle closure. If this 15-minute candle doesn't suggest higher prices, then I'm just gonna continue to practice patience, right? To continue to wait for more structure. And if we can't get an alignment between the markets, the easiest thing to do is to not be a part of it. That's super simple, super straightforward. So here, just wait. I don't really have to do anything as of right now. Just kind of have to just wait for something to be in alignment with Oh yeah, there was a trade here yesterday that I do want to go over with you guys. So if you guys pay attention, look at this. So prices here on Wednesday, we displaced a lot. We traded up extremely high, right? And we created all of these fair value gaps. So coming into the Thursday morning, I wanted to see prices, if prices were going to respect these fair value gaps or not. And notice here, this is this all-time swing. This is the swing high, right? This is a swing high, and this is a swing low. And if you draw up, if you take the swing high to swing low, right, you get equilibrium. And here on the 15, oops, where did it go? So if you guys take a look, the trade idea here from yesterday, or that was presented yesterday, was the idea of us trading back into equilibrium. So if prices were going to sell here, right, prices are going to most likely want to sell in premium, or selling in premium just makes sense. You want to sell at a higher price. So with the idea in mind, a reason for prices to continue higher here or trade higher is to seek premium. So this 15-minute model here is suggesting the idea, hey, we haven't traded back into premium yet. Let's take a model to target that equilibrium, that premium level. So the 15-minute time frame is suggesting higher prices. So now I can find an entry pattern on the lower time frames relative to the 15-minute model to target the equilibrium level of the dealing range. On the 4-minute time frame, we created this 4-minute fair value gap. And this 4-minute fair value gap suggests the idea that, hey, we could trade back into this 4-minute fair value gap and expand higher to target the 15-minute high. After we take out the 15-minute high, why else should we be continuing higher? And that question, why else should we be continuing higher, is the higher time frame objective concept. So why else should we be continuing higher? To retrace back into premium. Here prices trades back into the 4-minute fair value gap, and instantly we take out the 15-minute high, take off some partials there, trade back into equilibrium, bam, move my stops to break even, and then if I want, you can set up some standard deviations and just to let the trade do its thing. But that's one model from yesterday. There was another model here on ES where previous day high was the draw of liquidity for me coming into Thursday morning. And notice how this weekly candle closed, right? This weekly candle here suggests that the weekly high is going to be taken. So now the daily time frame and the weekly time frame are in alignment with each other. And why else should we be continuing higher after taking out the previous day high? Well, it's to target previous week's high on ES. So here actually I took a model here again, and this is a model that I would take every single time, right? And the model was to target previous day high and eventually target previous week's high. And ES ended up being the weaker pair of the two, NQ and ES, or NYM2. And yeah, we rebalanced, perfectly rebalanced a 12-hour fair value gap. So this is actually, I entered off of a 12-hour fair value gap, and just the lack of willingness to continue higher here. And I was also keeping in mind that yesterday was PPI, so I was anticipating for previous week's or previous day high to be taken with the PPI numbers, and we didn't do so. Thank you for taking the time to interview for the server position. I am pleased to inform you that we would like to offer you the server position. The next steps in the process will follow in the next couple of days. I know holidays are coming up and we are still in the process of opening. Thank you for your patience. Please respond to this message to let us know if you would like to accept the server position. I look forward to hearing from you. Hi, Randy. Thank you so much. Thank you for giving me the opportunity to work at your establishment. Thank you for giving me the opportunity to work at your establishment. For allowing me to work at your establishment, I would be happy to accept. I would be happy to accept the offer. When would trade? There we go. There we go. Let's go back to NQ. If we close below this 15-minute fair value gap here, the idea that we're going to target 4-hour high isn't going to be. Now this is going to be if we close below the 15-minute fair value gap, that would tell me that there's a shift turning, that there's probably going to be some sort of shift in objective, right, in bias. But as of right now, because we haven't closed completely below the 15-minute fair value gap yet, my bias here for us to target 4-hour high is still intact. But an opportunity to attack the 4-hour high hasn't been presented to me yet as of so far. So I did end up drawing the discount to premium of this swing low to this swing high. If we get some sort of, bearish price action and it gives us an opportunity to short to target the discount of this daily range, then I would be happy to do so. If it doesn't give me the opportunity, then I simply just wait and sit on my hands. But think that's gonna wrap it up for today. It's been a pretty long live stream so far. Yeah, thank you guys so much for watching, and until next time, I will see you guys probably on Monday. Oh no, I can't actually stream Monday. I have work Monday morning, so I'm not gonna be able to stream. But best believe I'll be on the charts. Yeah, until next time, peace out.